Why Caitlin Clark's trading card selling for nearly double the WNBA max salary proves players deserve more. Caitlin Clark's rookie trading card sold for $366,000 4 months ago. That figure represents over $150,000 more than the maximum WNBA single-season salary and $28,000 more than Clark will earn across her entire 4-year rookie contract. This disparity reveals a fundamental disconnect between market demand and player compensation that undermines the league's growth potential. Trading card valuations can offer a unique market assessment of fan interest and player marketability, untainted by the structural constraints that artificially suppress WNBA salaries. Yet whenever salary negotiations surface in public discourse, social media erupts with predictable refrains about players not deserving more money because the revenue isn't there. This oversimplified argument not only ignores decades of systematic underinvestment, but fails to recognize the league's current growth trajectory and future potential. As collective bargaining negotiations intensify and players articulate their demands for equitable sharing, it becomes essential to examine the flawed economic logic that has constrained women's professional basketball. Clark's record trading card price demonstrates market demand not just for individual stars, but for the high-quality basketball that emerges when more players can focus exclusively on their craft over the course of a single season rather than seeking overseas supplements to inadequate salaries. For that reason, the players' positions reflect strategic thinking about capturing value from continued anticipated growth while recognizing that individual marketability depends on collective play and competitiveness among all players and teams. WNBA growth outpaces historical NBA benchmarks. According to Dr. David Barry, professor of economics at Southern Utah University, the WNBA has $200 million in revenue today. Adjusted for inflation, per-team revenue in the WNBA today appears to exceed where the NBA was at back in the early 1970s when the NBA was the same age as the WNBA is today. The WNBA appears to be on the same path as the NBA. Barry has also noted WNBA players get less than 7% of league revenue. The top salary in the WNBA right now is less than $250,000. The NBA 50 years ago was paying its top players $400,000 a year, and that was at a time when the NBA only had $30 million in revenue 50 years ago. The WNBA is at $300 million in revenue, at least, and we also know that with the new television deal, it'll be at least $500 million. This comparison refutes the common myth that the WNBA operates in some fundamentally different economic reality from the NBA. Yet the treatment of players couldn't be more different, and at no time in NBA history, including throughout the 1950s when the NBA was a very small operation with very few fans, roughly a fifth of the size and scope of the WNBA in 2025, were NBA players being treated as poorly as current WNBA players. The WNBA players are positioning themselves for the future of the league. These players are negotiating their fair portion of the profits that growth trends suggest are becoming more realistic, not asking for a larger share of losses. The revenue sharing structure established now will determine whether players benefit from the success their talent and marketability are driving into the future. As Union President Nneka Agwumike articulated during recent negotiations, we see the growth in the league, and as it stands, the current salary system is not really paying us what we're owed. We want to be able to have that fair share moving forward, especially as we see all of the investment going in. The key phrase from Agwumike is moving forward. Current negotiations are not simply about adjusting salaries to match existing revenue, but about creating structures that allow players to benefit from the growth trajectory for the league. Further, the revenue isn't there argument collapses under scrutiny because it conflates current constrained revenue with market potential. Every metric suggests the WNBA operates well below its revenue ceiling due to strategic choices rather than market limitations. Engelbert acknowledged this reality. We want to significantly increase their salary and benefits while balancing with our owners their ability to have a path to profitability as well as continued investment. The path to profitability runs directly through maximizing the product's appeal, which requires treating players as valuable assets rather than cost centers. As Liberty Gar Natasha Cloud noted, we're fighting for what we're due, what we're worth, our value. They're going to be fighting for what they think protects the business. Our job is to find the common ground. That common ground exists in recognizing that player compensation and league growth aren't competing interests. These components of the business of women's sport are complementary strategies to be used to capture the massive market opportunity that current trends have revealed. The question isn't whether the WNBA can afford to pay players what they're worth. It's whether the league can afford not to make the investments necessary to realize its full potential. It wasn't a buzzer beater or a behind-the-back assist that stirred the sports world this week. It wasn't even a game. It was a card. Thin, glossy, about the size of your palm, with Caitlin Clark's electric smile front and center. It sold for nearly $240,000. Nearly double the WNBA's current max player salary. The reaction? Shock, awe, debate, but also a growing awareness that had been simmering under the surface for far too long. Caitlin Clark isn't just a rookie. She's a revolution. And her six-figure trading card didn't just break records. It broke the silence on a system that's been undervaluing its stars for decades. Scene, a living room in Indianapolis. Clark sat cross-legged on her couch, scrolling through her phone between rehab stretches. Ice pack on her ankle. Protein shake in hand. She nearly choked when she saw the headline. Caitlin Clark rookie card sells for $237,000. What in the... She muttered, eyebrows rising. Aaliyah Boston, lounging nearby, looked up from a crossword puzzle. Another one sold. Clark shook her head. The same one. One card. $237,000. Aaliyah laughed. Girl, your cardboard is making more money than your jump shot. Caitlin grinned, but there was a weight behind her eyes. That's the problem, isn't it?